This is Chad Toyne with a Monday, March 9 broadcast from Trader PhD. This edition was recorded late Sunday evening for broadcast release on Monday morning. The big news of the day, or should I say overnight, crude oil prices collapsed over 25% in early Sunday evening trading. $40 crude is now $30 crude, literally overnight. So what's going on? Let me spell it out for you. The coronavirus caused fear of an economic slowdown. The expectation of a slower global economy caused less demand for crude oil. Less demand for crude oil caused lower crude oil prices. And thus far, I'm talking about the decline that we had from the $60 crude that we had during the United States-Iran showdown at the first of the year to the $45 crude that we had just last week. The problem is that $40 crude is a disaster for oil-producing countries, those like OPEC. Low oil prices would savage the national budgets of countries like Venezuela, Iran, and to a lesser extent, Russia. The OPEC nations have had emergency negotiations wanting to have an agreement on production cuts to get a boost in oil prices. But here's what's happening. The crisis started when Russia refused to yield to Saudi's pressure for Russia to join OPEC in the production cuts. Saudi Arabia launched an oil price war on Saturday in response to Russia's refusal to cut the production. Crown Prince Mohammed bin Salman, MBS, has plans to retool the economy of Saudi Arabia, and Russia's stubbornness has thrown a wrench into the works of MBS to cement his political dominance. The Saudis' intent is to force Russia back to the negotiating table by engineering an oil price collapse. Saudi Arabia is sitting on a massive pile of cash. Russia is not. But Russia is more resilient to lower crude prices. So there's your standoff. Enjoy the show. So all of this has lowered the dollar, which is good for exports. Expect the world governments to try to take action to keep economic panic under control. Economic interventions might include monetary stimulus, interest rate cuts, currency manipulation, strategic oil reserve purchases, sanction pressure to cut oil production. When strong hands get squeezed, don't be surprised if strong action takes place with these countries. It's not likely that military action is going to happen, but it's extreme situations like this that make countries make moves that they normally wouldn't make. A winner out of all this is China. They need cheap oil imports to recover from the coronavirus outbreak. A violent whipsaw always happens after a climax panic in the markets. They're going to need some time to settle down and start to trend back into line with the new reality. Others are running for their lives. Try your best to sit back and relax and let the new landscape reveal itself. So what about the grains and livestock? The ag markets are at the mercy of the funds liquidating their positions to handle the much larger risk exposure that they have in stocks, bonds, crude, gold, currencies. When the dust settles and the money is counted, those ag markets that took a hit are going to be up for grabs, and therein lies opportunity. Welcome to 2020. I'm Chad Toyne, and this has been Trader PhD.